Welcome back to the channel, guys, and welcome to the video. Happy New Year. This will only be relevant for a short period of time, I'm sure, but today we're going to be talking about the role of real estate investing in your 2023 portfolio. So if you're looking to rise above the stock market, learn how to incorporate property into your investment strategy, and potentially achieve higher returns in such a volatile market, then this potentially is a video for you. As always, I have to be explicit that this is not financial advice and this is just for entertainment purposes. So let's crack on with the video. 2022 was not great for the stock market. We all know that, and if you don't, you do now. It was not very good.
He lost a lot.
While that can create great opportunities for new investors or people new to investing to get in and buy at a very, very good time, it also creates some instability for those who are already holding stocks. So I'm going to break down my 5 main reasons why adding property to your portfolio is something that I would consider in 2023. I also have to preface this to say that when I'm talking about real estate, it doesn't have to be that you go out and buy that property yourself. It means that you have to be the landlord, the owner, anything like that. There are so many different ways that you can invest in property these days, which I've already covered some on the channel, and I will go over those in a bit more detail today, but it doesn't mean that you have to have that huge bit of capital possible to start. You can start with a very, very small amount. It's just a good thing to add to your portfolio. So number 1, we have diversification, and by that I mean we're simply adding a different class to our investment portfolio. It allows us to spread some of the risk. It also allows for fluctuation. So if we've got fluctuating stocks like our growth stocks that traditionally have grown lots but have not in this current climate, it allows for that to be balanced slightly. So again, it means that our portfolio doesn't necessarily have to be as down as it currently could be. Now I'm going to do a whole video on diversification in 2023 and why it's so good because of those risks and the risks of the market. So if that's the sort of thing that you are interested, then click the subscribe button and the bell and things like that and do a thing. So while I have diversified my own portfolio, one of the things I've increased my percentage of is property investments over the last 6 months. As the stock market dropped quite significantly, I moved again to a more solid asset class, being property. And that moves me quite nicely to number 2, and that is potential income. Obviously, properties, no matter what you're doing, no matter if you're buying that property yourself, going out and actually paying for a property, or if you're investing through a company or through a platform that invests in property, you have that income potential back. You have that rent. Doesn't matter if it's commercial rent, residential rent, holiday let, you have an income coming back from that. It's your dividend back through rent. So even if there is a potential down market for property prices as well, you are still getting something back routinely for that investment. And number 3, we have capital appreciation. And by that, I simply mean that the property can go up in value. While we have some of the other sides of the risks that the property could go down in value, you have to really make sure that whoever you're investing through, or if you're physically investing in a full property yourself, you're doing it in a market or in an area that 1, you know, or 2, you've done enough research on it to understand whether you're likely to see a downturn in property prices or not. That one is key. But for the long-term investor, and we should all really be long-term investors, we're not looking for a quick win here. This is all about building wealth over time. So as a long-term investor, I do believe that the capital appreciation will still be there over the duration. So if I'm talking about 10-year duration, the capital appreciation will be there. So if you're going out and buying something, we do have a downturn this year or potentially next year, I believe over that 10-year period, you will still see a large amount of capital appreciation. And number 4, we have the fact that it's just an asset. You have a physical, tangible thing, which you don't tend to have with stocks. I've talked about this in videos before, but with any tangible asset, any investment that is a tangible asset, you still have the thing left in the first place. So whatever happens to the market, you still have this actual thing, which means the chances of it going to absolute zero are very, very slim. Whereas with companies, you can have whole companies and stock completely going to zero. This then, of course, mitigates risk and allows you to, again, feed back into this diversification, so you're balancing your portfolio out. But you have to look at the flip side as well. So there are risks with property at the same time. if you're owning your own property, or even if you're doing it through a platform, you have risk of capital depreciation, which, like I said, over time shouldn't be too much of an issue. But you also have risk of costs, added costs. The property might need work done to it. Again, it doesn't matter if you're owning it or someone else does. These things still happen. Maintenance needs to be factored in. You have the risk of a lack of tenancy. So whether it's holiday rental, whether it's a long-term rental, whether it's commercial let, you still have the risk of that being vacant and not getting that return back every month. So you still have to balance those things out too. So nothing comes with no risk, but at the same time, when you balance out the risk versus the reward and the stability or the more stable aspect of property, this is why I am diversifying my portfolio to add more property into the mix for 2023. And that is why I love Stake. I've done a video on the channel before, but Stake for me, it's not the casino app, it is the real estate investment app in Dubai in the Middle East. Currently looking to expand out into the US, the UK and Egypt. It allows you to purchase properties through them. You get a share of that property and you get the returns back. They do holiday lets, they do long-term rentals. So you get that rental income every single month back, and you get the capital appreciation. And one of the things I love about Stake as well is that they did an assessment on the Dubai property market in terms of how well it's valued, if it's overvalued, undervalued, etc. And it is currently well valued. So the chances of it depreciating are very slim. In fact, over the last year, my returns, and considering I've been investing from last February, so nearly a year, but incrementally. So I started some in February and every single month I've put in. So you can't look at the total returns because it's been done in a staggered way, if that makes sense. But my returns so far, I'm looking at currently 6.9% returns, which I think is absolutely incredible considering the current market, and that will only increase. When you look at the site and the properties on offer, you're likely to get about a 12% return per year, which in any market is great. But the current market, that's an incredible return. This is why I have put a lot more of my percentage of my portfolio into Stake. And if you want to do the same, you can find out more about it on other videos on my channel, and at the same time you can get a free $68 just for signing up, going through the onboarding process. Just use the link in the description. It's realtalk.business/stake. I would never recommend anything that I don't use myself, but like anything, all investing comes with risk. I'm willing to take that risk, but at the same time, I have done my research on Stake and I'm very, very happy with my returns so far. I will be looking at some other platforms of how you can invest in different properties without having to just purely go out and do it yourself, because that obviously comes with the time overhead as well, and the administration of dealing with all this stuff. So for me, I like to be able to do this through platforms and other ways like that, just to make my life easier. I'd love to understand from you guys how you are currently investing in property. If you're investing directly yourself, if you do it through an app or a platform, drop the name in the comments below. I'd love to find out more about these things. I'm always interested in getting my hands on another platform that other people use and trust themselves. I hope you like this video on why property should be a big part of your investment strategy for 2023. Drop me a comment and a subscribe thingy, share the video with your nan, and I'll see you on the next one. Peace.